Let's get started in our study of managerial accounting by taking a few minutes to identify the key characteristics of managerial accounting. The best way to do that is probably by distinguishing managerial accounting from financial accounting. Financial accounting provides information designed primarily for users who are not involved in the day-to-day management of the business. Financial accounting is designed to provide information primarily to providers of capital, investors and creditors, and government regulators such as the Securities and Exchange Commission or the Federal Trade Commission. Also, will utilize the information provided through financial accounting. This financial accounting information, used by primarily investors and creditors, is provided through summarized general purpose financial statements. Remember the balance sheet, income statement, statement of cash flows, which are prepared in accordance with generally accepted accounting principles. These financial statements are subject to independent audit and public dissemination for publicly held companies. The financial statements also provide information that is historical in its nature. You won't find in the balance sheet and the income statement projections of net income or a projected or forecasted balance sheet in the future. All of the information provided through financial accounting is historical information. You'll find the income statement for the year ended just this past year and the balance sheet reflecting all of the assets, liabilities, and owner's equity as of a point in time that is in the recent past. You will not find any kind of projected or forecasted, budgeted information. Now let's contrast that with managerial accounting or managerial accounting information. Managerial accounting is designed to provide information primarily for use by a company's officers and managers and employees so that they can better manage and improve the business operations. Managerial accounting is devoted to providing information to those who are internal to the business. This is not information intended to be used by investors and creditors. It's designed for managers to help them better operate and control and manage a business. As a result, managerial accounting information is typically not standardized. There are no standardized information requirements such as generally accepted accounting principles. The reason for this is that managerial accounting information is designed specifically for managers who tend to be kind of different from one company to another in terms of the information that they feel like they need to better manage their business. Remember that financial accounting had generally accepted accounting principles, these standardized rules of accounting and presenting information, primarily because it was designed to provide information to investors and creditors who were comparing the financial position and results of operations from a variety of different businesses in order to make better investment decisions. The whole nature of managerial accounting information is different in that it is not to provide, well, first of all, it's designed for managers, not investors. And the purpose of this information isn't to allow them to make comparisons with other companies, but simply to allow them to better manage the operations of their own business. What one manager believes is valuable and important information in terms of their management style, technique, or the way they operate may be completely different from how another manager operates and the kind of information they feel they need to operate their business. So managerial accounting information tends to be very creative. It's designed to meet the needs of individual managers and is not governed by any standardized rules in terms of presentation or even the nature of the information. Managerial accounting information typically also includes much more detailed information than you'll find in financial accounting general purpose financial statements. In financial accounting, you'll have an income statement that shows you total sales revenues. But managers need much more information relative to sales revenues than just the general overall gross total amount of sales revenues. Managers are going to want information about the sales volume and sales revenues product line by product line. If a company has a lot of different products, for example, if it's Walmart and they sell, thousands of different items of merchandise, goods, they're going to want to have information in terms of the sales volume and how they're doing in terms of sales for each of the different product lines. And not only that, they're going to want information not only about sales of different product lines, but they're going to want that information store by store. And they're probably going to want to know, some companies are going to want to know, geographic sales in certain different geographic areas or by different sales personnel so that they can calculate bonuses or decide on whether or not they're going to promote certain people who are involved in the sales process. You can see that managers need much more detailed information than investors who are simply trying to get an overall picture of how the business has done. Managerial accounting information is also not subject to any independent audit by some certified public accountant, and it is typically not subject to public dissemination. In fact, managers, the last thing they want is for information relative to the details of their business to be, available to the general public. If information is available to the general public, it can get in the hands of your competitors, and they might find some competitive advantage by gleaning onto some information that may be available through the public. So managerial accounting reports and information are not going to be distributed, generally speaking. And because this is information that is simply developed by management for management purposes, we don't need to have any independent audit because nobody external to the company is going to be relying on that information in terms of making their decisions. In addition, managerial accounting information many times will include budgetary information and forecasts. It is not simply historical information. Yes, managers are probably going to want to know what their sales volume was per product line, per store, for the recent past, last month or last year. So yes, they do have an interest in historical information. But a lot of managerial information is dedicated and devoted to budgets for the future, forecasts and projections. For example, management needs to make sure that they control their inventory, make sure that they have enough inventory on hand to properly conduct their business, but not so much that they're being wasteful in terms of having, a lot of cost tied up in excess inventory. How much inventory a business has on hand at any point in time will be based upon their projections of the sales volume in the future. When they're scheduling employees and deciding whether they need to hire more employees during a certain period of time, it's going to be based not on historical information. They may use that as a guide, but it's going to be based on what we think we're going to be selling in the future and how many employees we're going to need in order to accommodate that volume of business. And so many times the managerial accounting information is really committed and dedicated to projections of information rather than historical data. Well, we've kind of tried to distinguish a little bit between, in very overall general terms, the difference between financial and managerial accounting. What I'd like you to do now is pull out a sheet of paper and do a problem. This isn't really a problem per se, as it is an attempt to have you kind of respond to some different scenarios in distinguishing whether or not a company's informational needs would be satisfied by referring to financial or managerial accounting information. So why don't you do this next problem and then we'll discuss it if you want to through the walkthrough. Okay, Let's go over this problem by first noting, what it asks here. Given the following informational needs, would managerial or financial accounting provide the best source of data to address these needs for information? For example, let's look at A. If in fact we need information to better understand how individual product lines are selling in various geographic locations, well, you're not going to find that information through financial accounting or the general purpose financial statements, because the income statement provides gross total sales revenues and does not distinguish revenues by product line or geographic location. That information will be available only if management creates that information in their accounting system to assist them from a managerial standpoint. So that kind of detailed information can be made available, but it would be through the process of managerial accounting rather than financial accounting. Part B, to identify the percentage markup on cost on each of the numerous products sold by a company, again, is much more detailed information than is available through the general purpose financial statements created by financial accounting. If that information is going to be produced, it will be done through the managerial accounting system. Number C, if we need information to identify the total gross margin percentage on all of our company sales over the last 12 months, well, you could get this information from the income statement provided through financial accounting. Number one, because this is historical information over the last 12 months. It's not based on any projections of the future. And if they're looking for the total gross margin on all company sales, we can find that information on the income statement by simply identifying the total gross margin, net sales revenues less cost of goods sold, and dividing it by the total net sales revenues. And that information is right there on the income statement. Number D, if we need information to anticipate the amount of borrowings required to support operations over the next 6 months, well, this is going to require forecasts of operations and cash flows over, for the ensuing next 6 months. This is going to require budgeting efforts and forecasting, and that kind of information is not available in the financial statements. It's only through the managerial accounting process that we create budgets and forecasts that would allow us to obtain that kind of information. Number E, if we wish to calculate the price-earnings ratio for the company's stock at a certain market price based on historical earnings, well, the price-earnings ratio is the market price of the stock, which can be easily obtained today by simply noting at what price a stock is selling for currently on the New York Stock Exchange or wherever that stock is traded, divided by its most recent historical earnings per share. The earnings per share is designated in the income statement provided through financial accounting, so that is the best source of information to respond and calculate a price-earnings ratio. Number F, if we need to project how many units of sales are required to generate a 20% increase in our gross margin for the next upcoming year, well, again, this requires more detailed information than can be found in the general purpose financial statements provided through financial accounting. It's only in managerial accounting system that we could generate the information, or we would find the information associated with the number of units. Again, the income statement provides total sales revenues, but it doesn't distinguish how many units are sold and at what price they're sold. That kind of information is available to management through the managerial accounting system. Number G, if we need information to determine the amount of bonuses due certain sales personnel based on the achievement of individual sales quotas, well, that kind of detailed information is available through the managerial, not financial accounting system. If we need information to understand how a company has generally been financed to date, well, that is information that's available through the balance sheet created through financial accounting. On the balance sheet under We can determine the total amount of resources that we have, or capital, by observing our total assets. And then by simply noting the total liabilities and owner's equity, we can get a sense for how the company has been financed to date. Number I. If we need information to evaluate a company's overall liquidity as of the end of the last fiscal year, again, that information can be provided through the general purpose financial statements produced by financial accounting. You know, a company's overall liquidity at the end of the last fiscal year, that's historical information, and liquidity is distinguished by taking the total current assets divided by the total current liabilities, or the current ratio, or we could even calculate an acid test or quick ratio, which would be a more stringent test of liquidity, by establishing some of the current assets, or calculating the total of some of the current assets, not all of them, and making that calculation to evaluate overall liquidity. So that information is easily available through the balance sheet or financial accounting. And then finally in J, to determine and propose specific job terminations on a department by department basis in implementing some kind of an overall cost reduction plan for a business. Well, knowing specifically how many employees we have and what they're doing in order to evaluate whether or not we want to keep that particular job in place or terminate that position. That's much more detailed information than you're ever going to find in the financial accounting general purpose financial statements. So managerial accounting is the source of that information.